Welcome back. I recently listened to a Lithium podcast. I don't know whether any one of you knows Joe Laurie. It's like Marcus Moll in the stainless world is Joe Laurie in the lithium world. He knows everything about lithium and he's been in the industry for a very long time. And one thing he said in the podcast stuck into my mind. He said, the biggest problem the lithium industry faces is a lack of price transparency. And that's why I'm really happy and really excited to welcome our next speaker to stage, Peter Hannah, Global Director of Albemarle. Those of you who are not so familiar with the lithium industry, Albemarle is a mining company. They are one of the leading producers of lithium globally, with mines in many different countries. Peter heads global pricing director this team, and he's going to talk about this very big challenge that I just outlined firsthand and how Albemarle is tackling this challenge heads on. Floor is yours. Looking forward to your presentation, Peter.
Thank you very much, Sebastian, and good afternoon, everyone. As Sebastian said, my name's Peter Hannah. I'm the Global Pricing and Valuation Director at Albemarle. And it's a real pleasure to be here talking to you this afternoon about the lithium market. And I thank Metalshub for the opportunity. I do, though, think it would be remiss of me to begin my presentation without acknowledging the apparent juxtaposition of standing here talking to you about one of the world's foremost future-facing commodities in this magnificent setting of an old coal mine. But I think it's actually a fantastic opportunity for reflection on that. You know, we often feel like we are standing at the crossroads between past and future when we talk about the energy transition. But in reality, there is only one story, that of humanity looking to harness the resources of nature to meet our energy needs. And yes, it may be that the past is fossil fuels and coal, and that the future is more the domain of renewables and batteries and lithium. But I at least find it at least an amusing thought to consider that we may have an industry conference in 100 years' time with delegates sitting around in an old abandoned battery factory, imagining how we ever use these things containing lithium to power our world. You know, progress is a wonderful thing, but it does always require an upgrade. The actual topic of my presentation today, though, is something wonderfully common to all markets, old and new alike, and that is the importance of price transparency. To me, the notion of operating in a market with opaque pricing is similar to the idea of driving a car in a new country where all the road signs are blurred out. Yes, you may get to where you're wanting to go eventually, but you're likely to waste a lot of time and resources in the inefficiency of doing so. And these are things that we can scarce afford to lose in a market like lithium, where we're demanding on so much of it in terms of growth, and also where the underlying fundamental driver behind it is an issue as critical as climate change. So, first of all, before I get into talking more about the lithium market and pricing in more detail, I'll start with a brief introduction to Albemarle as a company, as I appreciate not all will be so familiar. First of all, draw your attention to this disclaimer on forward-looking statements and any demand projections shown. And then on to the introduction. So, Albemarle is a global company, but we're headquartered in Charlotte, North Carolina. We are a leading provider of lithium, bromine, and other elements that are essential for the functioning of our modern world. Our lithium, of course, goes into things like EV batteries, but also batteries for stationary grid storage solutions. Our bromine goes into varied applications, but one of the main ones is flame retardants, and that's used in things as varied as the upholstery in your car, right the way through to high-tech wiring and connectivity solutions. And of course, you know, before lithium was best known as a battery ingredient, perhaps its main claim to fame, aside from the Nirvana song, is actually as a mood-stabilizing medication. And we still have a lot of applications in the health sector for a variety of our products. And actually, that's something that I find interesting about working in lithium. The history is so deep and the applications are so varied that there's always things to surprise you. One of my favorites is that the drink 7-Up, the 7 there actually stands for lithium. Lithium's atomic mass is 7, and lithium was included as an ingredient in the original formulation of 7-Up, presumably as some sort of a mood enhancer or pick-me-up, or so I'm sure the advertising went. But it's not just these quirky factoids that make lithium an interesting industry. To me, it's also the complexity of the supply chain itself, which is both challenging and rewarding to learn about and understand. So lithium doesn't just come from one resource type in the ground. It's actually extracted from 2 main types of resource. The first of those is hard rock mining, your typical form of mining, big hole in the ground. There you're going after a mineral called spodumene. But there's also lithium extracted from brine resources. These are these big salt lakes or salars that you get in places like South America. And here the brines are evaporated by the sun, and lithium and other elements are concentrated out. Once you have these raw material forms, there's then a whole industry built around conversion and refining of those raw materials into your refined lithium compounds and chemicals. And there's really a myriad of lithium-containing chemicals. The key ones, though, that you want to know about are lithium carbonate and lithium hydroxide. These are your main forms of lithium that go into batteries, and they go into different types of batteries. So lithium carbonate goes into batteries that are in a car, but slightly lower range vehicles, lower energy density, but more affordable, more economical. Whereas lithium hydroxide tends to go into your high-end vehicles, more premium priced, but longer range. And one of the strengths of Albemarle is that we are a leader across this whole supply chain. So we have the world's leading hard rock assets in Australia. We have the world's leading brine assets in Chile. We have a global conversion industry in China, Australia, and the US. And we produce pretty much the whole range of lithium-containing products. But let's shift gears now and talk a bit about how the lithium market has been evolving in recent years. And it certainly has been evolving very significantly. And this, of course, is tied to its role in batteries and the role of those batteries as a climate change solution. So lithium-ion batteries are actually not particularly new. They were first invented in around 1980 and then commercialized during the 1990s in the consumer electronics sector, things like phones. But as the emergence and maturation of electric vehicles as a technology through the 2010s, and in particular its role as a climate change mitigation, that really propelled demand for lithium to new heights. And through this past few years, the 2020s now, we've also seen very rapid growth in demand for lithium batteries to be used in energy storage systems, these grid balancing solutions where you have deployment of things like renewable energy. The upshot of this story is the picture you see on the right, the fact that lithium demand has really increased very rapidly over recent years. It's been growing at around 20% CAGR or thereabouts for the past few years, and that growth rate is likely to continue around that level for at least the next 5 years, possibly 10 or even beyond that. And you're probably thinking that with this rapid growth in demand, we've probably seen some periods of product scarcity and tightness and resulting price spikes, and we certainly have done. But those have also been generally met by equally significant responses on the supply side. And that, of course, has given us this classic cyclicality in the price picture that you see on the chart here. And obviously, the feature that is jumping out on this chart is, of course, the most recent price cycle. This really was one for the ages, and it continues to have a big impact and legacy on the industry as we speak today. And given its significance, I just wanted to spend a few moments going through a bit of a play-by-play timeline of what happened here to help you, understand how the lithium industry operates and what we can learn. So if you start this story around the 2019 to 2020 time, this trough in pricing as we were coming off the back of the last price upcycle. As often is the case in commodity markets, bear markets are the authors of bull markets. They set up the next cycle, and that's exactly what happened here. So this period of low trough pricing led to a number of supply shutdowns of incumbent supply, but it also constrained investment in new supply of lithium. We then, of course, had the COVID pandemic, and off the back of that, governments invested quite heavily in the green economy, and in particular in electric vehicles. That drove demand for EVs and lithium by association, and supply was unable to keep up. Prices spiked over a period of about 1 year by around 1,000%. They went from about $8 a ton, or $8 a kilo, to about $80 a kilo. They then kind of plateaued for about a year, from 2022 through to 2023. During this time, there's a bit of a debate around how long it would take supply to meaningfully respond. With lithium, it's not just about extracting it from the ground, it's also about, as described earlier, this process of refining those raw materials to battery-grade usable chemicals. And there's a debate over how long that would take. What the industry didn't quite count on, though, and I think this is a familiar story among a number of industries in recent years, is the ability of China to do what was previously thought, if not impossible, then very difficult, in a very rapid way when it puts its mind to it. And that's exactly what happened. China managed to bring on, or lead the bringing on of a lot of new supply, and that brought prices crashing down very rapidly through 2023. We've then, through the last year or so, also seen a bit of a slowdown in EV demand from Western regions like the US and Europe. It stayed strong in China, but it has tapered off a bit in these other regions, largely as a result of macroeconomic conditions, but that has also exacerbated the surplus and driven prices even lower. So, we really have done the round trip in pricing here over the past 4 or 5 years, as you can see. What I find interesting, though, is that this intense cyclicality that we're seeing and have been seeing in lithium may actually be symptomatic of some more, almost what you'd call it, structural challenges for this market. I often say that lithium is like any other commodity market, only more so. And what I mean by that is, of course, all markets, and certainly all commodity markets, are cyclical. But lithium has certain trademarks, certain hallmarks of what you might call a structurally volatile market. And you can see the manifestation of that on this table on the right here. This is a chart of major commodity markets and their annual price moves over the past decade or so. And you can see that lithium generally either tops or tails this table. It has no real chill mode in the middle. But there's fundamental underlying reasons for why it's like this. And if we think about them and understand them, it gives us more learnings around how to operate more effectively with them. So let's go through these. To me, there's 3 factors. The first is the demand trajectory. We've spoken about this already. It's very rapid, but it's also very inconsistent. It's tied a lot to government policy, which inherently is uncertain. And you also have the factor that it's quite a new technology in the scheme of things. So the consumer sentiment side is also relatively unpredictable. So what we have is this big upward surging supply wave, but it's moving around all the time, and that makes it difficult for supply to match that. So we have 2 waves, supply and demand, and the chances that they get very out of phase at certain points is, of course, inevitable. And that drives these dislocations we see in this boom-bust dynamic. The second factor is the storability, or lack thereof. So lithium chemicals like carbonate and hydroxide, the main ones for batteries, these have shelf lives. And in the case of lithium hydroxide, this can be as short as 6 months before you might need to consider reprocessing that material at a cost. And this disincentivizes, of course, the holding of a lot of supply chain inventories. Relative to more storable commodities, this industry tends to operate on more of a hand-to-mouth basis, and that limited supply chain stocks means that we generally have a more limited buffer to these supply-demand big swings when we do see them. The third factor is the general newness of the industry. It's a very young industry at its current scale. This means that there are limited above-ground stocks or obsolete stocks to act as a secondary supply reservoir that can come back and be pulled back to the market in times of extreme tightness. So these three factors for me really conspire to cook up a recipe of structural volatility. And the bottom line here, quite literally on the slide, is that these are challenges that aren't going anywhere. These are part of the fabric of lithium. It's in lithium's DNA. So what do we do about it? Well, one thing that I think is obvious is that transparent pricing is a key tool to be able to react more quickly to changes in the market. If the industry can see shifts in supply and demand, shifts in market conditions happen in a more timely manner through the price signals, then they will be able to act with more efficiency to help the industry balance. So this is why we see price transparency is so critical, in particular in a market like lithium. So this brings me on to my final section, how price transparency in lithium is evolving, and what Albemarle in particular is looking to do to help support improve that. So before I dive in and delve into this slide, I do just want to make the point that price transparency and the maturity of pricing mechanisms has come a heck of a long way in lithium in the past several years. We've gone from a market only 4 or 5 years ago that really had a prevalence of long-term fixed price contracting, so a single price for a long duration contract. That of course causes a lot of rigidity. We now have seen the emergence of very prominent third-party pricing references and indices which have high degree of credibility and are now very commonly used in industry contracts. So most contracts now on a floating basis, more reactive, more dynamic to the market. We've also seen the emergence of very successful futures contracts as well, both in China and internationally. And these have added to the overall price discovery ecosystem and in particular facilitated forward price discovery. But, of course, we do also need to think that the crux of price discovery in a physical market needs to be that physical spot price discovery. The market price needs to be really reflective of real world conditions, the real economy, and the value and use for those products. And with that in mind, Albemarle in March 2024 launched a program of what we call bidding events. These are essentially spot tenders that seek to support transparent spot price discovery in the lithium market. We've offered a variety of our high-quality lithium products via this channel, including both lithium carbonate and spodumene. And the participation of these has really spanned the value chain, and it's grown over time as well, which has been encouraging. To date, we've run more than 30 of these such offerings, and we've done so, of course, which is why I'm here, on the platform of our esteemed host, Metalshub. And I think it's worth just saying a few words as to why we made that selection. So, we considered various options of where to or how to run these bidding events, and we selected Metalshub for 3 main reasons. The first was the user-friendliness of the interface for both buyer and seller. You could tell this was a platform built by people who understand what it's like to trade physical products. The second is the flexibility of the solution in terms of designing a listing that's appropriate to a given circumstance. And this is important for lithium, where the degree of standardization or market conventions hasn't really matured yet. And the third was the very ever-attentive support from the Metalshub team themselves. So, a few words by conclusion. We at Albemarle are very excited to continue being a part of this innovation in digital markets. We're encouraged to see that some of our early moves have seen some of our peers start to follow suit with their own similar price discovery initiatives. And while we do see that this industry does have its challenges, we've spoken about those earlier, we see price transparency as one of the key tools in our arsenal to be able to address them most effectively. So with that, I'll say thank you very much for listening.
Thank you, Peter.
Thank you, Sebastian.
I think we have maybe time for 1 or 2 more questions.
Sure.
And maybe I start because I learned something new, that lithium is not only used in batteries, but also in mood stabilizing medicine. As a shareholder of some mining companies that is mining lithium, where can I buy some? That's one of the questions. So now over to you, to the audience. Let's have a discussion around price discovery. I think this is something really innovative that Albemarle has started. Some others in the market have followed. The floor is yours. You can use Mentimeter or just raise your hands for questions. Yeah, Tatjana?
Thank you, Peter, for the presentation. I have 2 questions. The first one, the utilization of this platform of Metalshub, did it help to make new customers?
Yes. So firstly, to that one. So we found that it was an effective means of running a competitive sale process and ensuring that there's fair competition amongst potential buyers. And yes, we've also found that we've onboarded new players who were not prior customers of Albemarle's, and so thereby have also managed to expand our customer reach and the companies that we're able to service.
Thank you. And my second question, how do you manage all the CSR issues like screening of the customers or financial questions? How do you manage it?
Yes, we have a rigorous KYC process that is led by our compliance division. All customers that we service have to go through that. So for those customers who are existing customers, they've already been screened, so it's an easier process. For new customers, they all went through the same KYC and global ethics and compliance checks before they were able to participate.
So your CSR rules remain the same even going through a Metalshub platform?
Yes, correct.
Okay, thank you.
That's okay.
Okay, there's a few things already turning up here on the Mentimeter. Does lithium qualify for listing on an exchange to be able to hedge price risk and master volatility? Maybe that's a good one, Peter.
Yes, so lithium does qualify for listing on exchange, and it is listed on exchanges. There is a main exchange in China called the Guangzhou Futures Exchange, and that is a physically settled lithium carbonate contract. It is also listed on the Chicago Mercantile Exchange, the CME. That's a cash-settled contract that's settled against a market index. And it's also listed on some other exchanges as well, like the London Metal Exchange, the Singapore Exchange, and most recently, ICE have also announced a listing as well. So it is listed on many exchanges, is traded quite actively as well now. So it is very much a maturing commodity market.
Any more questions here in the room? There's plenty more up here. I think everyone wants to know what the lithium price will be in the future, but I'm not sure how much or how you can talk about this topic, but certainly it is of interest to many people. How will the lithium price develop?
I think the lithium price will be what the lithium price will be, and you're right, Sebastian. I would not want to say too much on that topic. I think my legal department might be eyeing up that big red hook there if I were to be drawn too much on that one.
Okay, maybe take one last one here from the board. What's the role of China in price setting, in the price setting environment? China being a very large buyer of lithium.
Yeah, so China is the main spot market for lithium. It's by far more liquid, much more liquidly traded in China than anywhere else in the world. So by virtue of the fact that China is the biggest market, it consumes more than half of global lithium, but as I said, it's also the main trading venue for spot material. It really does lead the global price discovery. So the role of the Guangzhou Futures Exchange is very important, and also the China domestic physical spot market.
With that, I say thank you very much, Peter. It's been a pleasure to have you
Thank
here.
you very
Thank you
much.
for the interesting presentation.
Thank you, Sebastian.
And a little small gift from us
Thank you very
for
much.
coming.
Thank you.